Okay, Sunday, February 26, 2017. I just want to start off by saying I believe I hit everybody up for sending out what they've sent in monthly contributions to my venture here. I just took a snapshot and sent it to you for those of you who itemize on your taxes. Um, yeah, I only have to do that once a year, right? Unless you guys are quarterly. All right, so I did sit through 16 weeks of the tax code at one time. Uh, and I'm not afraid of 8,000 pages anymore. I can, but here's a good one for you. So this is, was this 13? Somewhere in there. I'm digging through the pages, and lo and behold, there's a certain section that's set aside if you contribute $10 billion, i.e. Warren Buffett, to save America or something. It was some sort of stupid bond deal that it was tax-free. And I caught that. And I'm like, you got to be kidding me. There's one provision in here just for Warren Buffett giving Goldman Sachs $10 billion. And it was right there. And I'm just like, I'm like, okay. It's kind of like when they pass budget bills and whatever, and you read through it and all of a sudden it has tariffs or other ways of keeping out, what was it? Unvarnished arrows for bow and or arrows. And I saw that was the bailout, the troubled asset relief program. And I just jaw hit the floor. But then again, right? If you're going to read 1,170, I think it was 74 pages. Oh, bless them. I love double spaced. For a guy that has ADD, when there's only 400 words on a page, you can zip through it in a hurry. But getting back on track. So for all of you that contribute every month or what have you, to keep this thing afloat. So I'm going to just run through some of these charts that I've saved myself and looked over. There'll be a couple of gripes in there, and then we'll go on. I think I sent everybody out I'm doing another webinar tonight before the markets open up here. I think it's a half an hour before they open up. On Sunday night, I like Sunday night just as much as you guys do. I'm going to try and do Sunday, Monday, Tuesday, Wednesday, and then Thursday and Friday I have to kind of clean up my own mess. I do have EIA, and you know how badly I hate working past 9:30 in the morning, but that's what time Europe closes, and that gives an hour after EIA on Thursday and Wednesday. So I can handle work until 9:30, and then at 10 o'clock I guess I can go to the library or go to a movie and come back and see what's happening. Because a lot of this is, I'm basically waiting for it to happen, right? It's kind of like stocking up on fireworks for the 4th of July. You're just waiting for it to happen. So for me to sit in a chair for 5 hours or 7 hours waiting for it to happen, I suppose the feedback I'm getting from folks, a few of you are adhering to what I said. You find one thing, you know it, up, down, and sideways. You figure out a strategy, and let's put this in perspective. If you're aiming for 30 or 40% a year, then you have to put out a plan. How much do you have to make a month? Just like I said, the best hedge fund guy, 3% a month for the last 40 years, right? So let's put everything in reason. If you think Warren Buffett's a day trader, no. Okay. We just learned that she's a scam artist as well. So, bastard. It's okay. It's all good. It's all good. So find one thing. Some of you are finding one thing. Now, you do not be bullish or bearish on the thing. You're just trying to point out a direction. If you have a 3-year-old niece, ask her if it's going up or down. All right, but the deal is with the plan. Okay, you find one thing. Here's IWM, which is what? This is like the Russell Futures, or TNA, which is the 3 times of this, right? Okay, so it's going up. So the bias is up. So you're looking to buy on weakness, right? Okay, so what do we know? This is a weekly. Went sideways for an extended period of time, broke out. I'm treating this as a retest. But at any point, this stuff can fail because it's been going up for 7 years, 8 years, 9 years. Okay, so we're kind of long in the tooth. Secondly, looking at the pattern, take a look at this pattern. It is a long zigzag pattern, right? And now we're moving up. The numbers coming off of this, some of these are just extremely 30%, and we're talking 30% in a year, okay? And like I mentioned before, over a 100-year period, stock market goes up 30%, 23% of the time, so twice a decade. So this isn't really at the beginning of the year, and this really, that kind of, but I'm going to include it anyway. Over a 100-year period, I'm going to cheat because it decided to be 3 weeks late. And time is relative, right? All right, philosophical Kev. But we have like the old ABC pattern, and now we're extending. The deal is the angle of ascent, right? You have something very nice, whatever. Now you're just charging away. Like I said, I'm going to treat this as a retest of the breakout, but any failure on here, remember, it's going to blast through, okay? And this is basically the election stuff. If you blast through, even if you jab down here, you're going to take out, you're going to start working into that Trump deal, the Trump rally, whatever. So post-election, post-election, not opulence. They're the opulence. Jeez. All right, so I'm going to Florida every weekend, you bastard. And it's paid for. And it's his property. I'm not going to get into any of that. So, grrr. All right. Stand up, people. Fight for your rights. All right, so treat that. So on this weekly here, you have other targets. This is a year ending in 2007, 2090, or 1997, 1987. Just go down the line, whatever. It's a 7. Time is relevant. Okay, but the deal is the angle of ascent is increasing, right? So can it go up this way? Well, if it does, then there you have it, right? But that's the behavior, okay? I did talk about this being that type of period, right? 97, 90, what was it, 94, 95, 96? Probably about 95 to 2000. The thing basically goes straight up, okay? All right, so we're supposed to have domestic spending or whatever to the last people off the couches, blah, blah, blah. That's the whole key to this is consumption. Get the people off the couch or just give them a check and have them spend it. If it goes into the economy, for those macroeconomics folks, it's 10 times the if you pay the people, you can spread out the funds. Oh yeah, they have this down to a science. But the numbers are so much bigger. It doesn't make any difference what the minimum wage is if you're on the couch. You're still you're getting further and further away of poverty. All right, so let's move on here. Okay, so this, like I said, this is just a breakout, right? But we're long in the tooth, blah, 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 yada, yada, yada. We're seeing some cracks with like cliffs and steel and coal and all that. That was the setup, right? The stuff's not going to happen. Congress is on vacation, whatever, they'll reconvene whenever, yada, yada. They're talking it up. So what I'm looking for is the narrative is that they sell this stuff off, all right, and then they gobble it up and pass the bill, all right? But the other thing is that a lot of markets are getting kind of goofy. Friday, we had, gold and the dollar up. And oil added another 40,000 bodies into the Commitment of Traders report. So like I said, how I'm looking at this is that I'm treating this as a breakout and a retest now. But if anything comes back in here, if Sunday, Monday, Tuesday, they blast through the other, at bare minimum, it'll be just a jab. But it may be starting off something here, okay? You could look at it also on this one too, is that this is a double top, but then they broke out. What happens? What about retesting back in here? If you draw a trend line on in here, right? Okay, so there you have that. Here's another one, IJR. It just says core small caps, ETF, whatever. But this one barely got out of there. All right, and came back in. They all kind of look the same. Actually, the volume is dropping on this one, just like the volume dropped on this one. They're not buying this, Okay, that's what I think. I think that's what the story is. All of this is the Trump rally, but they don't do anything for 6 months. What happens if they say, "Hey, look, we're not going to spend money"? The whole budget thing. We want a smaller government, but we want to spend like some bitches. Whatever. I want to spend like some bitch too. This is pretty voluminous right here. This is the number. This is the amount of volume traded in this area here. So what do we know? There's a ton of bodies in here. Technically, you have a sideways type pattern. Okay, a channel it's measuring, so it'd probably get up to here, or on the downside, come back down to here. What is this? $2, $3 on this IJR options? Yeah. So, I mean, if you're long this stuff, you can sell, what's this, April and May? Here's April, May, June. You could sell options out of the money this way, too. If you have if we have a strong day on Monday or something, they poke on through, put some options out in here. I mean, what is that, from 70 to 86? What's that, 20% plus the options? You could sell some off here and sell some off of here, because the swing is quite severe here. All right, the giddiness, and we know that with VIX and that. Okay, so here's NVIDIA. All right, it was brought to my attention by the herd in this area. Yeah, I was around in the 80s and didn't buy it, whatever. It's not my cup of tea. All right, so we have the double top here. I believe we had an earnings play too, just like with Apple, and we had a pretty good sell-off here on Friday. I threw out a little feeder to see if what would come up, or a teaser to come up with NVIDIA. I think I said like 93 or 103, and then what was it, 90 and 110. I got one reply, and he said 93, and it immediately went to 101. All right, so the deal there is that told me that the people short term were bearish, something fierce, and I don't know if it's on the video, but I knew that the next dropping points in the video were somewhere around, it's on the chart, 93, 90, we'll get to it, 93, 95, whatever, 96, whatever, 7. Friday, right? So I ended up selling because I'm short this thing beforehand on the options. I sold off some puts. Okay, because what did I know? I knew that the people were bearish on this thing. The put's bloated. I'm already short, so it's just a covered right. All right, so I sold. They were over $3 for these options. As long as NVIDIA basically stays above 99, those $3 options will hopefully go to zero. I'll take the stock market going up, or just NVIDIA itself, right? Each its own. We'll say 103 or whatever. Hang around there for a couple of days. These 99 options, they're going to drop. I sent something out that the options on Friday, the 100 calls, right? 100 was roughly supported, broke it. What are the odds that it's going to come back and test 100? I don't care. It's Friday. It's a stock option deal. Buy one at 10, buy one at 9 cents, buy one at 8 cents, buy one at 7 cents, buy one at 6 cents, buy one at 5. Holy buckets. What do you know? You can get filled for a penny. This is my dilemma, sending you guys this stuff. One, you have to get in, right? Okay, if somebody else put the orders in front of you, you're at the end of the queue, right? If somebody got up on Wednesday and said, hey, good till cancel, buy one at 10, one at 9, one at 8, one at 7, one at 6. You do that, they're ahead of you, so you can't get filled. The other thing with options is how I look at it as gambling, but it's back to the math. If somebody gives me something, what can I lose? I can lose a dime. I can lose 9 cents. I can lose 8 cents. We're walking up to the machine. We're putting $25 in it, $50, $100 in it. We're pulling the trigger. Where do you get out? Well, there were the chart I sent out had 2 spots. What was it? 21 cents and 34 cents. That was just to get started. And on the flip side, it went over $1. So what's a dime to $1? What's a penny to $1? Those are some serious zeros, right? Do they come all the time? Well, if the marketplace is right. And the other part is you're taking 50 or $100, chucking it at something and buying it at $10, $9, $8, $7. So that's your afternoon, folks. Movie for 2 and popcorn. That's what you're spending. But if you snag something like that, now you have 10 times. You throw 50 bucks, we say we threw 100 bucks at it. Now you have 1,000 bucks, right? Right? You have 1,000 bucks, we'll say. Now I have no problem with you guys pissing away 50 or 100 bucks every week on these things, because that's what it's a coin flip. You're the right or wrong. The first thing is they know you're going to be wrong because they're priced for it to tease you to get in there. They get burned too. All right. And the other one was I just had to buy from somebody who wanted to get out. All right. And I sent one to one other guy on Wednesday. And we'll get to it too, but it was only a nickel on Bank of America, going either way. You know, above 25, below 25, 24.50, you know, that kind of thing. Goes from a nickel, all of a sudden it's at, 25.35. Well, here's the problem there. You buy it at a nickel, 25 cents. Your commissions were what? 3 cents? So it cost you 8. Now it's at 25.35. But the deal is it gets down to math of these things. If you guys are going to swing for the fences every week, you're not going to get anywhere. And especially if you start chasing your tail and you're all over all this shit. Really think this one through. If you have 14 trades in front of you and 9 or 11 of them are losers, you're worse at a coin flip. All right. So you need to get your head in the game on this thing. You find one thing and you follow it. What do you need to make? If somebody calls in and says that they want 50 cents or $1 a day, okay, well, you got to run on through it. The other one, too, is think of what we're doing here. It's kind of like at one time they had flags running from the stock exchange in New York to Philadelphia. People with flags, just sending stock quotes. And then we had radio, and it had to be on the steamships so they could trade. There's stories about people on the steamships when the crash hits. I send something to you, all right? The math has got to be simple. 10 cents, 9 cents, 8 cents, you're just gambling. That's fine. But on the flip side of the thing is don't worry about because you're not with everybody else on this thing, right? It's a mechanical thing. And the other one, too, is if you get something, look at this move here. Okay, in the video, $25 to $100. All right, 1 year. Do you think you can, if you get into something, you think you can sit on your hands for a year on this stuff? Do you want to make 400%? Did you know you're going to make 400%? No. But you have a large sideways pattern, breaks up, basically retests. That's got to be a sucker right there. That cleaned out everybody, right? And this is your reentry on here in that 1, 2, 3 pattern. It's in hindsight, right? So what do I think? Do I think NVIDIA is going to go up to 175, 180? I don't know, but I'll be more than happy to whack it with a hammer up in here because he saw this behavior. There's 2 things that are going on here. There's everybody that says that this thing's gone up 600,000% in 30 years. Then you have a hedge fund that says, this thing's going to go down. We get the first crack underneath here. And now we have to see if the bulls, what I'd like to see new highs, because then what does that do? That trains the youngsters to jump up and down again and say, I got me another winner here. Could the bulls handle it before? No, they double topped this thing. But could it come down to 85 and then go up? Sure, or more, sure, right? And then the Elliott wave thing will just be sloppy about it and say that this is the first wave, this is the second wave, the third wave is usually the longest. You could say that this is an ABC pattern of 4, but it could chop around again, or it could just basically collapse. And that NVIDIA, right? Oh, it's the best thing on the planet. Perfect. It goes all the way up. It rolls over. Was this one leading the market? Does it lead the market on the other side? All right. But to me, this was the story. What did I post? 2 weeks ago, 3 weeks ago? 3 weeks ago. I posted that this had a heavy volume gap. Gosh, gee whiz. This last week here, it sounds like a few of you jumped on gas or Boyle or futures or mini futures on natty gas, which is great. Holy buckets. We're all in the same boat together, and I only have to talk about one thing. it leaves me lots of extra time to go find little nickel shit that you guys like to play. And it's just a nickel. Just pick one. I think IBM is going to drop 100%. Okay, with one nickel, please. You know, so one thing. Find one thing. That's all we have to do. We'll make it real simple. One thing. Okay. All right. So SCO. Okay. So the crude oil thing, right? We talked about on Friday, someone into Doug. I think it was ERX 2 times, 3 times. This really hasn't reset. The ADX is down here too. This is on the short side. What I'm looking for here is that a whole bunch of people to be wrong. Now they did have a sideways pattern on here. Did kind of the same thing if you look at the pattern. Same type of, we'll just call it a little triangle deal here. Same type of deal, a little more choppy here. The oil deal, they keep piling in on oil. Just we have massive amounts of people long. You know, is a war going to break out? I don't know. But I did mumble something about the Suez Canal back in the 50s. And they just blew up a ship in there and freaked people out. All right, so to go along with Dig and Dug and looking at this really isn't anything clear. It isn't really, you know, you have your overbots up in here, but you don't have a washout. The last washout down here was oil in 14. And it's kind of stalled here. The other one too is oil's been trading basically sideways, and they have had the luck of rolling over. And that reassures people when you warn them, you know, week after 3 months now, we've been warning that that the oil longs are something fierce. Now that it won't take much with the sideways here, right? This is very narrow sideways. Wide swings, this is what you want to get once you get in. We have the narrow stuff. What is that? The risk is less. How does this work? Do you buy some here at you go, I can't wait. You got to get in at 33. Then you want to buy at 31, 29, you know, that kind of thing. 22, 23. You know, you have to have some sort of plan and work the math on it. All right. Does this look like it's going up at all? No. The best we have going forward on a weekly basis is sideways. Something's going to happen here. It's going to go this way, or it's going to go this way after the sideways. You know, for those of us who have a bearish tint, the only reason why it's bearish is because all the potties are in there. We saw that with the US dollar. We saw that with natty gas. It's in there with soybeans. There's a lot of markets. But you have to have some sort of plan. You know, to me, and anytime I pause, when I talk and there's a pause, usually the trend continues. If I look at something and, you know, and pause, that usually means the trend continues, because what I'm processing is what are the odds that it goes up compared to down, 58% down and 42% up. You know, this stuff is weighed, options market and everything, the volatility, all this stuff is programmed in there. But the problem is everybody's spastic and chases their tail, and they have also in their portfolios 14 things in there, and 11 of them are losers. You know, got to find one thing. Here are the cues. So what do I got going on here? Okay, here's a 1 minute chart. All right, these have these whatever Renko bar things. So it's similar to Heikin-Ashi candles, okay? And then what I've added in is I've added in some sort of oscillators, because what I'm looking for is some sort of divergences in here, okay? Now on the cues, on the upper part here, the red is unbalanced volume, money flow, and then RSI. And the other one here is, because they're Renkos and stuff, some of these, I want to see how these indicators behave. That's the other thing too, is if you're trying to scan for something, you're looking for something, you have to know what you're looking for, right? If the market's going straight up, I'm looking for maybe stocks that are gapping to collect. If we know 67% of gaps are filled, I am going to assume that pointing straight up in the overall general market, and then your stock goes gap up, that 2/3 of the shot is it going the downside. What's the flip side of that coin? Well, if everybody's bullish, this thing's gapped, how much are the puts? If I'm long the stock, do I want to sell some call options, you know, April, and then buy March puts? You know, this is a multi-layered thing here. You know, if you want to buy and sell all day long, that's fine. Hey, pay the tax man. That's how we balanced the budget under Clinton. Everybody had a silent partner with the IRS for day trading. You know, you have to do this here. You have to be focused. Go back and look at everything you bought in 2016. Go back and look at everything 2015. Put it on a chart service and go, what was I thinking? You know, and most of it's patience. These are large macroeconomic cycles. This is, if you buy something, you want to hold on to it for at least 8 years, or you know, that kind of deal. You know, where are we at how many old cars there are on the road? You know. This is, you know, if we're going to get everybody shovel ready, we're going to need to sell more shovels, you know, that kind of thing. All right. So on here, it's a 1 minute Renko. So why I went after the Renko is because it takes out some of the time on here for me. I'm trying to jam as much short-term data as possible in here with holding the price. It's like I'm looking at this as like, say, market profile or point and figure charts. And I throw in the extra indicators, and I'm seeing here if this actually works. Is there a possibility of trading the cues? All right. What's this? Here's a line. You buy below the line for shits and giggles. What is that? 129.50. And here's the next line. 130. Okay, here's 50 cents. Anybody want 50 cents? You know, does this going to continue to the next line? Well, that's a whole $1. All right. Back on here, you had price go higher, and you had some divergence here with these little oscillators. One says KST, whatever that is. I think that's a multi-hour moving average type deal, and STI is like some strength. Because what I'm looking for is cracks in the overall upswing in the market. I think the market just comes off because of the Trump thing's not been approved, and we'll play that game. You know, also on here is I have a 4 and a 9 and an 18 moving averages. Okay, the 4s for day trading, right? If you trade, you know, say down on Thursday, down on Friday, down hard on Monday, the moving average comes down hard and then it pokes on through. Okay, and for me, I was just looking lazy fat man way of just drawing in some trend lines, and I was putting in the oscillators too. But here's my divergence. What day is this? The 23rd. You buy a 130.50 put or something. It drops 50 cents or $1, or you pick up 50 cents or $1 on the put. You get out of it. What about once a day, you let it come to you? Of course, you guys can't do this. This brings me back to the flags thing. You guys are at work. We're at full employment, right? So you need to have this stuff in the day before. But Kev, we don't know about this. Well, there you go, right? We're back to gambling. All right. You find one thing and you set it up. What's this say to me here? It says like, well, we'll probably swing higher Sunday night futures or something on the cues. You know, how will this relate? You know, have some sort of plan. It changes. I guess this is how I look at the market. I look at it as Sunday night is a good time to actually fist the herd, because half the market's open, the future side, but not the equity side. You have Asia and Europe, so you can actually get practice to see if you're right. Well, if I'm going to say the stock, say I'm wrong, this isn't going higher, okay? And so you want to short, you can start off by, say, shorting the Nikkei market in Japan, all right? It probably won't hurt you too much. It's $5 a point. But you can play it that way and then go, okay, I'm right. Now do you want to hold on to your winner? You know, if it trades down in Asia, do you think the markets are going to trade down in Europe? Well, you know, if you're a European guy, you wake up for Asia, because you're in bed right now when I do my little thing tonight. You know, if you're Europeans, it's going to be after midnight. So, you know, you wake up for Asia when I go to bed, you know, and then I try to get up for London. All right. So if it's down in Asia, it might be down in Europe, and then odds are probably pretty good it's going to be down in America. You know, then what do you do? You know, it's to me, I'd go, well, if it was down in Europe and down, maybe I'll cover my Nikkei futures in America on the open and call it a day. I'm done. I got whatever I needed to get, $200 a day, $1,000 a day, whatever. You're done. You're done. Don't muck it up. All right. So, like I said, for me, what I'm doing is because I'm intraday type of guy, whatever, because I'm looking for the cracks. I have to find, you know, the failed structure underneath all the screaming and stuff. You know, and it will get it with the low volatility. It will get more violent. The kids especially will go through extremes. If the market goes higher from here, they're going to think that they're invincible again, which is fine. You know, and we have that stupid IPO coming out, and I think it's they priced it. I guess they're only selling 3 billion of that stock, whatever, Snapchat or something. But it's only a small percentage of the overall company. So I thought they were just pitched. I mean, 3 billion's that, but if it's valued at whatever it is, it's like, no, I don't think so. You know, I mean, think about this. You go to summer school at the community college, you develop an app that sticks, and you get $20 billion. There you go. Have a good day. Thank you for playing. You know, but in this case, it's basically if you have time. Plus, also on Sunday, what do you have? Well, my gosh, you're not working, right? Pretty much, I am. I'm working 8 days a week, man. For you guys and gals. Okay, I'll just put it in there. Humble or fat man. So okay. Sunday you can trade, right? Whatever I don't know what your broker has to offer. Whatever you could trade mini soybean contracts, mini wheat contracts, mini corn contracts. $10 a point. Commissions are going to be the same. Mini natty gas futures. You can find other things. You know, and you just have to take advantage of it. You really shouldn't think this one through. Just put the thing on and deal with it. Put a stop and say, hey, I can only lose $100. Put it on and see what happens. You know, if you start chasing, I need to buy gold because of this, that, and the other, I can already hear the toilet swirling. That's exactly what I want to hear. All right. Okay, on that 1, 2, 3 pattern here, this would be your buy on it coming through. So in theory, if you were smart, okay, the mechanics of it, this is your like 1, 2, 3 pattern. You buy back at the 2, and then your target is actually, it'll be up in here. That's how they swing it through. All right. Like I said, I just, as you guys go and do this stuff, because I'm going to end up doing this on the inside, you know, right? So it won't be as public anymore. The only public time will be when I have to talk about why I did what I did, when I have to actually tell the public what I'm doing, which is not a nice thing. Why did you do that? That's like, oh, you guys, come on. You're not supposed to know that. Run him. I'm like, oh, you bastards. That's when you'll be sitting there going, wow, somebody just bought 30,000 options on something that only had, 1,400 outstanding. Yeah, it's someone like me. I know you bastards. You're coming after me. Quick story. So I had $2 and never played a pick 4. Open up the program and, took a horse, boom, boom, boom. I'm like, wow. And on the last one, I just, started clicking away at the horses, blah, 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 blah. But I started at 1 and I didn't get to 11. I guess it would have been more than $1 or $2. And all of a sudden I'm at home and I'm like, my God, this one's going to win. And I'm like, boggers. So I had to go back and hedge. But because I didn't have the extra penny and pound foolish, it was $3,200. Because I covered my ass all the way to the end, except for the end. So now anytime the fields are over 8, I start at the end of the program. I don't do that much. It's psychology, having to get over how to lay down $20 to win $2. It just baffles me, how to get up. But I guess that would be the flip side of when you hold on to losers, you are willing to put down $20 to walk away with $4 left. All right. We all have our little flip. There's mine, right? Right. You take the favorite that some tracks have to pay at least 5 or 10%. It takes 2 minutes. You bring in 20 grand. You're trying to win $200. Those are called bridge jumpers. And sometimes they don't come in and the jockeys end up in the mud. All right. So here's another one. Okay. Follow me on this one. This one is 3/1000, 1/10,000 of a penny. The deal is that the pattern just caught me. This is SMCE. I don't want you to go in here and throw $5,000 at this thing, you idiots. You know what I'm saying? And then get out your calculator and figure out how much it is. And even but what it was just the patterns that came down. A couple of crosses, it kind of hammered out. Now remember, this is hard. What is that? Is this $1,000? There's not even $1,000 in this thing, right? Whatever. 3 times 9. 3,000, 10,000. Jesus, it's even worse than I thought. All right. So you couldn't anyway. I mean, you definitely make your own footstep. There's no doubt about it. You go right here, wow, it's up 400%. Yeah. And guess who got filled up 400%? I'm not saying that, but that's how the game's played. So, but this just caught my attention, and that's how it was, and the first turn off is just itty bitty, whatever. If it takes off running, hallelujah. It's like a fig Newton in heat. Kevin, that's not very good. Java, coffee holdings. Okay, what caught my attention here? These are those wrinkle things again. What is this? A daily? A daily. Just down, bounces up, comes back about halfway, and now we get a little bit of a turn. So this just says coffee holding company. How does this relate to coffee in general as a commodity? The thing that spooks me, though, is this thing is loaded on this unbalanced volume, but these wrinkles may throw things off. So I'm looking to see if there's anything that can filter out of all this muckety-muck. The only thing that caught my attention was that this thing came down, it bounced up, it came back, and now we're turning. How do you know this thing's not running to 8.5? All right, that's $4 on a $5 stock. Do I think it's going to go up a couple of bucks? I don't know. But you can get in here and it's a 40-cent stop, right? Or how about this one, right? How about we'll think this one through? Okay, we'll call it $5, and then it'll go to $7. It's $2. Well, then maybe you have a dollar stop, $4. Okay. You're well, if I put my stop down there, they'll see it. Well, if you buy it $5 and sell some or half or whatever at $7 and make $2, use half what your gain was, $1, and use that as a stop. It's a $4, it's a roundy, it's a target, whatever. It doesn't make any difference. The whole deal is to have a freaking plan. So Java, if this thing swings, it's a measuring pattern too. It'll swing higher. All right. I don't know how far back does this go, 2013 and stuff. So basically all it's done is just get down to basically run to sideways. I don't know. Don't have a clue. All I'm doing is just looking at the pattern, run through the charts to see what what caught my eye today. Same type of deal here with this BXC. This one's at $6.50. It's landed on whatever. S1. The unbalanced volume is up there. So the bodies are in here. So these are the weak hands getting out. So here you have $6.50 and $6, and here's $5.50. What happens if the math is, well, just using round shares. I mean, you guys can use 10 or 50 or 100 or whatever. What happens if you buy 100 at $6.50 and then buy, X amount of percentage lower, 10 at $6.50, 10 at $6, 20 at $5.50, 40 at $5, 80 at $4.50. You know what I'm saying? Math wise, right here, $5 or whatever. That's $1.50 drop. All right. So do you want to put in an order to buy it 504 or something? You can see the volume spike here. The bodies are in here. Some bodies, they bit the first one. So now we're looking for them to wash this thing out. So this BXC, what is it? Building materials. Well, that doesn't seem to be doing the whole Trump thing. Right? So maybe there's something wrong, but this would be one to watch. Because on the flip side here, it'll probably double. You know, if it comes through the top of this thing, it'll probably double. Oh, right. Building materials. Aren't we supposed to, whatever, industrial building materials? Are we doing any industrial building in the United States? How do you know these things won't merge? You know, here's the other one. Oh, the company sucks, but they're right on a main. They have 20 stores and only one is actually worthwhile. They may own 4,000 acres in Birmingham, Alabama, or some deal right on the rail line, but everywhere else they're at is dead meat. They invested in, it didn't come through. Well, we made a whole bunch of stuff. We got out to North Dakota and it didn't happen, and they're bleeding money. And now there's a warehouse in the middle of North Dakota with full of stuff that can't be used. You know, some of these guys, when the oil patches, they were driving oil 300 miles in a truck. These guys were making 6 figures driving oil in North Dakota to get to where that needed to go on the main deal. It's like a stream or a creek, little trickle, you know. Load up the oil and you have to drive it 300 miles to get it to market. This little piggy, but it's on its way to Cushing. Or thereabouts, Minneapolis probably, Pine Bend. All right, so if this comes through, it's a swing. So what do we know? We got a heavy volume. We got the unbalanced deal. So what do we need? How about this one? If there's going to be a day when Cliff and what's the other, FCX and all of these things just crater, you know, down 12, 18%, I would be inclined to come and look at this because I'm going to assume that one's also going to have issues. BXC. Do I have my thing on? No, I don't. Well, all right. So I just like this, put an order down here. What's this line? It's just a line. I don't know. Whatever helps and encourages you to pull the trigger for those of you with scared money. You know, you have to have some sort of plan. We had a heavy volume up here, so we know all the bodies are up in there. Here's another bar. Guess what? They bought the dip. You know, do we bring in, how about this one? Do we bring in a dip somewhere between 6 and 6.5 and it bounces up to 6.5 and then falls to 575? What is that percentage wise? 10, 12, 13? Yeah, I'll just put that in your pipe and smoke it. You know, but on the flip side here, it probably double. You know, 12 to whatever. Go from there. But it's been only going down for years. You know, so that's the flip side. How much more down does it have? But you have to have some sort of plan. I'm not saying that, you know, this is one you should spend the rest of your life on, but you at least have some sort of plan. You know, you're looking for a heavy volume day where all these people that got in are got to puke it up. You know, $5.75 and $5. You know, how do you know you're not going to get a double bottom? You know, in theory, you should wait for it to come back through. Have an alarm up there for shits and giggles, and let's go to the next chart. All right, here's one. AMCN. Adam, Michael, Charlie, Nelson. Air Media Group. Okay, so what caught my attention here? Same wrinkle things, blah, 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 yada, 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 yada. Like an ABC wave pattern here, wave 4, and this is wave 5. And then it stalled. Here's a $2 stock, $2.50. Okay, let's play the numbers game here. Close at $2.54. All right, some of you are going to come in at $2.50. It went below to $2.40. That's fine too. I don't care. However you want to do this. Buy Now it comes down to your commission too. If you're paying $10, you're paying 500% more than you should. Depending upon your broker, Interactive Brokers cost you $1. You know, $1, I believe, and I get stuff from them all the time. The deal with, they didn't have charting and stuff at the time, but they had low prices because they came off the floor. You know, my broker disappeared, just like the exchange disappeared in Minneapolis. You know, whoever had cheap, because I was going to keep the same behavior, right? Make 60, 80 trades a day at whatever the spread was, $12.50. Make 3 trades a minute, you know, 3 trades an hour, 3 trades every few minutes. Or wait for those opportunities of making a dime, you know. But that was my behavior. You know, as a floor trader, I have to put bids in that. I'm going to put numbers out there all day long. You know, that's my deal. All right, so here's our thing, AMCN. Okay, so the deal is you just come to market. Now, it's up 4 cents, whatever. All I know is it fell, lost its momentum, and it stalled. If it go, here's one you want 50 cents or a quarter or 20 cents. And then you have to look at your commissions. If your commission is $10 on 100 shares, what is that, a dime? So here you got to get to 260 just to cover costs. So that's on the way in, 270 on the way out. It's already moved, what, 10, 15, 20, 30%? You know, here's $3. So there's 50 cents, and you spent 20 cents of it in commissions. You know, percentage wise, that's huge, right? It's, oh man, I had the stock that went up 20% today. Yeah, but how much did you get to keep? So I'll throw this one at you. AMCN. Don't go at 250. You could go at 253 or something. I'll have to break this down further. This is a daily, but just to see on the inside, you know, see what it looks like. AMCN. But that was it for me, right? We're just going through these real quick. This one was, I think this was gas related here for the Canadian guys. Capped Energy Bear. Okay, I think the number on this one, Energy Bear, the Canadian deal, was that I don't think it moved as far off the bottom as the others, I think is what the play was on this one. But this is HEDTO for the Canadian. Horizons Beta Pro, S&P Capped Energy Bear. Capped I don't like. That means they don't let it go open-ended. Which means if you get a trade, I mean, here in theory, this thing's, the computer says 11, but in theory, it should run up to 18. Are you guys willing to sit on your hands? If this bottom holds, say this bottom holds at $7 and it's at 9 and it's going to go to 18, do you double your money? Are you willing to sit on your hands to double your money? You know, if you keep chasing your tail and every day you change something else, you know, you're going to end up with nothing. Shit costs money. You know, commissions, you go in, just go take a look at your commissions you spent. You know, I'll take that. All right, here's the first little inside deal here. Okay, this is S&P, this is China Petroleum, this is Sinopec or something. All right. I was beginning to get a lot of this type of pattern with these lines, and they're buried, but I believe one of these is momentum. So I had 3 or 4, I'm not sure if they're in a row, that one would be inclined to say that this is going to hook and go higher. One, this is Chinese petroleum. Okay, so we're going to start off, this is with an oil deal, right? So this is, how does this relate to oil? If this Sinopec in China looks like it could roll over, right? Okay, roll over. Is that bad news for oil? All right. Now these haven't turned yet, but I believe they're momentum indicators. So I wanted to see some, you know, if this thing is panning out. You know, how is this Renko? Because a lot of these things, they're a little more funky if they take the bar versus, you know, like the RSI. How does the RSI handle something like this? Or does the RSI handle the raw data underneath from the bars? All right, so in my case, this is Kevin's little learning thing. Okay, but I'd seen, come on, you little, what the bonkers? All right, 3 or 4 of these in a row, but when I moved out to just basic bar charts and stuff, I said, well, these are all turning negative. How come I'm getting a positive turn on here? You know, yeah, you have a moving average, whatever. It's just a freaking line. And I thought, well, these indicators are getting buried. You know, and we're going back to, here's pre-Trump, right? Yeah, pre-Trump is off the screen. So I thought, well, first it's Chinese. It's a name that hasn't been used before. It's China whatever. Maybe this is a precursor to oil coming lower. And this has options, and what is it, $80? So, I mean, I haven't looked at anything, but what happens if it goes to 74? What happens if I'm wrong, it goes the other way, whatever. But the thing was, is it was, here's the whole divergence thing here too, right? So what would I be looking for? If we could get a bounce on here, maybe I'd buy the puts. How does this work with relating to oil? Maybe I want to buy a put up in here. How about this one for wherever it's at, Fridays, next month, whatever. Put something in for 10 cents. I'm going to have to dig a little bit deeper on this one. But what caught my attention was, you have the divergence. This is an oil related. It's a name that hasn't been talked about in a while. Is this a precursor to oil coming down? Because, a few markets are in my head right now. Basically, oil, I guess natty gas is just to sit and wait. The bond market and the dollar and probably gold here. Gold, I got a sneaky feeling I think we might be coming to the end of the line for right now. But I have to kind of feel this thing out here. I just need to give gold a couple of days here. Even the next target is 1280. Now, if it runs up there Sunday, Monday, then it's a classic. It's running. Then at 1280, 1355 or whatever, doesn't seem so far away. Percentage wise, it's even less, right? Going from 1,000 to 1,250 to 1,500 is lower percentage. All right. So this S&P Sinopec or whatever. Sinopec, whatever. Have to eyeball this to see if this is a precursor to oil going lower. ABio, all right, this one popped up. What caught my attention here, okay, was that it popped up and came back. It had a pretty decent, this is a daily decent close. We're getting this here. So this is either two things. This is either the indicators are holding their quote unquote 50%, or they're going to fumble and roll on over. Now this one was played before a few weeks back, right up in here. All right, so a whopping 70 cents and then came back, gave up about half. Now, does it have another swing here to go from 260 to 340? Or in your case, if you're paying $10 on 100 commissions, it's 280, to 40 is 60 cents. So that's whatever, 20% move on the stock. Is it a C wave? I don't care. That was the plan. What's the plan? This stuff isn't very, decent looking. I guess this wasn't much decent back here. But it's one of these, what happens if you have an inverted head and shoulders? Am I a huge fan of $2.60 stocks and run them up 60 to 80 cents? Not really. Not really. I'd rather go and do that in the futures market or something. But each their own, and I have to point this out because you guys send this stuff to me. All I know is this is what you're doing. You're trying to make a fat percentage on a lot of money in a short amount of time. If you want to do that, then you want to trade Forex. But if you want to go and look at this one here, you say you came in early here, you're still sitting on your hands for 3 weeks. Then what happens? You guys basically give up on Friday, take your loss, and go move to something else and sit on your hands for 3 weeks. Here's one, this BCPC. This one looked on the short side here. Options on there. I don't know. BCPC. What was that other one? ABio. See, I've already had 5 things I have to look at. Does it sound like I'm going to make any money off any of them? God, I hope so. Actually, no. I don't trade. BCPC. Yeah. So on this one here, you have a target of 77. Figure out some sort of angle on that. This is your support 53 or 83. 77, 75. The little trend lines here, that about halfway back, 73. Bullish objective 92. All right. But you can set alarms right here at 93. What is this? I don't know. All right. Oh, this is what it was, specialty chemicals. Okay, so here it is, blah, 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 unbalanced volume. This is daily, weekly. So the bodies are in here. All right, so we're getting a hook here. It doesn't mean it can't go up here. All right, but here's the thing. Think of this as like the dog chasing the car. Lo and behold, it got the freaking car. What does it do after it gets the car? You know, do you have a measuring pattern here? Sure. What, 55, 50 to 65, 70, 80. So we're up to 80. So the measuring there. But we're back to the angle of ascent. So you have chemicals that another swing higher. But what about the building materials the other way? Does this join in? You know, you have some sort of plan. You know, it has a sideways breakout, come up, retest, does it again, gets a little iffy here. You know, if it breaks out higher, trail something behind it, options are going to be cheap. You know, the bodies are already in there. They have to continue to buy. You know, whoops. All right, I was just comparing here with the Nikkei of 89, its peak at 40,000. And it's dropped all the way down to 8,000. Oh, that's a good, 80% drop? But I wanted to compare that to China Nikkei, because I think China went up and then we're kind of doing this thing here in China. All right. So for the gold people, okay, the gold stocks moved higher, or this GDX, okay, ran into the upper line here. If you're long, recommend, you know, stagger out some calls on this thing, because it comes down to, in my eyes, it's either 1280 or 600. So I'm looking at gold right now. It's either 1280 or 600. That's how I'm looking at it. So if you're, should I buy puts, Kev? I don't think so, no. You know, one, it doesn't move much. You'd have to figure out something where it's some sort of spread deal, right? I mean, we're talking, if it goes from 24 to 22, are you happy? You know, are you a happy camper? To me, that's just it. No. If I'm long, I'd sell some calls, maybe stagger them out. Because if it gets back below 20, then it's like, okay, you know, time to get out. All right. This was the best I could do for the bulls on the ABC. This would be the same pattern that happened from 85 to 87. 87, we had stock market was, well, we were moving with housing then. That was 87 was a peak. This is about the 61 area or so. I think it's 1255, but we hit 61. There's 63. The next level up here is 1325, I think. 1332 and a half is this one up in here. But this is like the spin would have to be, but bond rates are going the other direction, right? I mean, this is forward spending. So that's the best I can do. I guess I could draw a trend line across the top up in here. This spike here is Italy. So all those people that were in for the Italian deal, if they're still holding on, they're going to be itching to get out too, right? Now I did this kind of, you know, rail the troops. Horizontal target. So I threw that in there in vertical target. Vertical is just a trend line through here. All right. We hit a moving average, whatever. The cloud would also be resistance on here too, would be a little over 13. But what I did was I took from this move to this move is about 31%, and then from the low back up gets kind of close to the 1500 area. Is it going to 1500? I don't know. All I know is that you have to kind of keep this thing a little bit close here. The bonds are going the other direction compared to gold. In theory, I suppose the stomach did twitch today about the dollar going down to like 97, 96, 95 kind of thing. All right. So like I said, we're going to have to give this a couple of days. But like I said, gold's either 1280 or we're going to head lower. Okay. You can draw a channel in here too between, I guess I should have done that, draw a channel. But I wanted to keep this as bullish as possible to see what kind of reaction I get from the herd. This is the high at 1900 and something. Oh, that was the other thing too. Okay, so we had the high. I took the high. These are quadrant lines. Just break these up into quadrants. It banged off of one too. So we hit a happy place at 1261. We hit a quadrant line. We hit a moving at whatever you want to do. Blah 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 blah. So this would be. Does the kids seem a little bit frothy and J-Nug and stuff? What's dust look like? What's J-Nug look like? Or J-Dust look like? Here's FOMC meeting with gold. Okay, so this is a daily, right? So we have a little bit more room to run on this moving average. What are we at? What is that? Is it even on there? Boy, you're awfully dark. What are you? 1225. We're above that. So what am I looking for? Oh, here's the moving average. Okay, so this is a 200-day. What's that? 1264.60. Wow, geez, for $3, that kind of thing. And here I have also, again, this is an 8% move from December. Then I took it again from down in here, 8% move. It gets it up to R1, which is at 1279.70, just like it says on here, Kev, 1279.77, 1301. I should send this to you guys. All right. But FOMC, so how about one of these things here that gold swings higher into the FOMC, right? And then they decide to raise, because by that time we're going to see about oil. Oil's either going to be above $55 or below 51. That's what I'm looking for. All right. But that might be kind of a swing into this. There's a line here too around that 1280. All right, Bitcoin. Just watching. This is just here nor there. It doesn't. Whatever. All it is it's. You can put Beanie Baby on here. You can put price of gold on here. All I'm doing is taking a look at my. What do I have? 1, 2, 3, and a rollover. Rollover. Here's divergence. Divergence. What does this look like? Bitcoin, 1,200 bucks. I think I said 12 or 1,300, and then it'll crater. I think I give it one more swing. I don't know. All I know is that if Bitcoin's at a penny, that's fine, because you'll move a bazillion Bitcoins. It doesn't make that all remains the same. No, it's just the price of it. I need 1 ounce of gold. Well, you're either going to pay $1 or you're going to pay 1,200 bucks. Notional and nominal value. It's like diamonds. Diamonds are as plentiful as water. But you keep a cartel and you keep a noose on it, and you keep them scarce. That's part of the problem with Bitcoin, is that it's quote unquote scarce. But you want some supply, just drop the price. You'll find a shitload of supply. All right, so this is the NVIDIA deal, right? So NVIDIA on here, this is a 1 minute in the Renko again. Blah, 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 bounced around 100. So I knew that the next levels, here it landed on S2 and turned. We also had divergence. That was the yellow line. Divergence here. Price was lower. Divergence here. At S1, you knew you were here. What are the odds? You crack. We know when you crack something, usually you can retest it. Even if it's a gap too, right? So this is one where yesterday you were at 100. Okay. You drop down to S1, you retest it. Well, like I said, the calls I think opened at a dime, traded down to a penny. Last I left it was 98 cents here, and one time I think they were $1.40. We'll play stupid round numbers. You buy 10 of them for $10, or 10 of them for $100. I'm not saying you're going to get this every week or whatever, but that was the plan. You crack a support level, maybe you bounce off of it. It's Friday. You're just rolling the dice, man. You know, how many of these you want to hit? 10 times your money once a quarter? You know, what is that? That's we'll say 13 weeks. So over this, you have to hit at least 2 of them. You know, and like I said before, is you have to be able to get these things taken. The first time I did something where I kind of angled towards options. Look, if you can stick to futures or futures derivatives, perfect. Okay, because that's the best thing that I have going for you. You start getting into equities, all of a sudden I'm in London, I'm in Japan, I'm in China, I'm in India, I'm in that's fine too. Okay. But because of nobody really asks a question, let alone stay with one thing, I'm also all over the board too. I'm just running through sectors. Whatever the hot sector is, they lead me there. I learn a lot more from what you guys bring to me. You know, you don't understand. I have outside eyes. So when everyone comes running to me for Apple, I know that they're in trouble. And I have to get on my box and go, look, I might not be right. I don't want to talk you out of a trade, but everyone came to me with Apple, and that's never a good sign. And I love it. You guys can send me emails and stuff. That's fine. Keep me on my toes, right? You know, if I'm all, you know, you can hear it in me from somewhere, you know, from somewhere else than where I should be. But here was the plan. You know, if you guys want some of this stuff, it's going to cut into my time on somewhere else. And the other one too, it's just numbers. You know, you buy 3 of them. You know, you break up your $100 into thirds. You know, this is the same reason why you guys go after stuff for earnings. You think you're going to hit it. And if you don't hit it, it's ugly. You know, in this case, we get options every week. You know. So by Wednesday, I begin to think what I think is going to happen by Thursday or Friday. You know, the Bank of America ones were Wednesday and they were nickel. I'm like, for $5, you get 3 more days worth of fun. You're in it. It was worth what, 500 or 700%. Both of them, both the calls and the puts, around 25. Daily, this one is kind of doing a little pennant type of deal here. We're reaching an apex. How I'm looking at this is it's moved to a pretty good clip. Everything's jammed. It's a London stock, but it's what I caught my eye here is it says gold. You know, this is this exactly what gold hasn't done this. Right? $9 to $20. Okay. You know, we've had gold you know, it's pretty rich here, and the bodies are in here, so this is susceptible to a rollover. I mean, if you're in, you know, London or whatever, there's a lot of room underneath this thing here. I mean, even to retest it is $1.50. You know, but it was one of these where it's all jammed. You know, we're reaching some sort of apex here. So if gold rolls over, comes off $8 to $12, you know, by Monday, you know, a lot of these are going to come crashing down. That was just it. It was just the whole look at me now kind of thing. How did that work out with the 4, 9, and 18? Here's 18 or 18. Here's another one here. Does it say what it is? No, but it's the same type of deal. You get a sideways pattern, it breaks on out. Logs chart $2.50 to $6. Everything's jammed. You know, reversal. You know, you could have a $2 drop on this thing. You know, I'm just trying to get a taste of where everything's at in general. YXI. Okay, so here's short China. All right, so 1 minute again, 2 hours. So this is 2 hours. This one's going back to, here's the election. So China on this one, okay, short China. All right, so that's why it's been doing that. Okay, you had a bounce here, you had a bounce here. Now you're going to get working on some divergence here, and this is China. RSI is beginning to cross lower prices. Like I said, I'm just testing this out for the Renko. How does this pan out? But if China goes down, there's that Sinopec we just saw, goes with oil, maybe, America, yeah, we're going to spend lots of money and, build bridges and stuff, but then China farts. China's just a little bit bigger than us, all of a sudden, they don't need as much copper. They don't need as much concrete. They don't need as much rubber. They don't need as much, China farts. You get fart for 3 months, 4 months, 5 months. Whoopsie, fart. Everything backs up. They go on strike. There's a revolt. Nothing comes out of there. Nothing goes in. The supply lane, it's kind of like when the Long Beach guys went on strike, fruit and stuff rotted in the right outside the docks. We want $120,000 a year. Okay. There you go. And the contract will be renegotiated in the depths of the recession. Yep. That's how it works. All right, here's one, ROM, Ultratech. Okay, we've talked about XLK and stuff. They're all running, right? Some of these numbers are buried pretty hard. I'm not saying you need to get out of them because at the end stages and stuff goes bonkers, right? This thing could go straight up. I don't care. The deal is to have some sort of plan, and you have this one, ROM, hardly anybody plays it, but it gets you back to the technology sector. What's the flip side of this? Remember I talked about all these, 100 and 200 and 300 ETNs. This one's 100 and whatever. What is this? 90 to whatever. It's up $30. Even if it pulls back X amount of point, it does have options. What happens if you snag something? And that's the whole deal, is they have some sort of plan. Everybody, if this is going, where the put's sitting at? Where the put's sitting at. You're watching these things to crack, because the deal is something with some of these that have moved like this. If they crack, a 1% move down here is different than a 1% move up in here. What happens if the market drops 7% in 3 weeks? You have to be ready for it. The whole key to this is have some sort of plan. Little dots again, little dots. New highs, not a lot of stocks are coming through, so we're narrowing. They're all playing to the top 100, composite stuff. Here are the dots over here. Didn't get above it. It stalled and it rolled over. And this took May, I remember that, June, July, August. We finally had it. So 3 months. What's 3 months from today? February, March, April, June. Let's play the quarterly rotation. Where are we at? We're gonna start rolling over the futures guys in a couple of weeks. We're gonna roll them at the highs. You know what? I smell something here. We roll them at the new highs. We have FOMC. FOMC raises rates, and then the market rolls over. It could already be starting. I don't know. It's just have to have a plan. If you want to capture all this stuff, by gosh, you're going to have to hang in there for at least 3 months, right? Or you snag this one. And in my case, for those of you that have been following me, you know about this. I'm jumping up and down. You think I'm getting anybody's attention? And all of this here, this is where I wrote my little pithy VIX deal. Where is it? August 1st, right here. And it didn't take long. VIX just fell out of bed. Guess what happened in this one? 2 shopping cart day. Buy. It was incredible. I had one position on Euro New Zealand, I think, moved 1,900 pips. In less than 20 minutes, and it was buried. I'm thinking to myself, am I going to get this fill? It stopped. There was just so much supply. They fixed the price on it and moved as much as they could. And I'm like, okay, I'll short it now then. It's insane, but my price is fixed. They never came back. But they had to move so much, and they were making it back by the spread. They just left the market there and let the people click back and forth with, a spread that may have been 6 to 8, maybe at 40 or 80. The thing just moved 1,900 pips in 20 minutes. What is that? 10 times your money. You know, got to be prepared. You're at work. You know, there's a reason why I get up at the morning. You get up at 2 a.m., 4 a.m. in trade London. You're gonna get ahead of the game. We'll take gold for example. Gold's down $10 in Japan tonight, down $20 in London. You think it's gonna be down $30 in America? Yeah. And guess what's gonna happen? You cover your short. How did you get short? Well, you got up for London. You took a look at the chart, kind of looked at stuff and said, well, you know, Kev says there's only $3 to whatever to the upside on gold. Maybe I'll short it. See what happens. I still have my stock. I'll short a mini gold contract, 30 ounces. See what happens. Came back down here again. All right. Whoops. This is a for shopping cart day. This is my post about seeing 2600, 2400 on the S&Ps, right? Oh my gosh, 2600. I better start working on some bigger numbers here for my vocabulary. Gold again, horizontal targets. All right, soybeans, longer picture of where beans have been in the past, right? If this a bear flag rolls over, can beans go to 650? Oh, that'd be great. You know, by the way, that $2 down is 10 grand, $4 for is 20 grand. Margin is $2,000. So there's 10 times your money if beans come back down through this way. Can beans go up? Sure. Can have anything happen. Hey, draw a trend line this way. Oh, broke it. Draw a trend line this way. Thing is just to have a plan. We had a plan on natty gas. Just want to point this on again. This is the S&P from 1995. China World Trade Organization jumped on board. Here's an 11% drop, 10% drop, 13% drop, 24% drop, 13% drop, all in the process of a bull market, right? Here's the deal. This is a logged chart. If I would have just taken out the bars, you wouldn't have known that there was a 24% drop, a 13%. Here. How about this one? In 97, we'll see 2 sevens. Where we got? January, February, March. Here we go. Here's March, right? Where are we at? March. 10% drop. 817 to 733. 10% drop. What happens if we have a 10% drop from here? We're down 230. So it's about 2,000. Market falls down to 2,000 on the S&P. Then we go up again. That's a hell of a percentage that way. 7 to 9. Then we're up 30%. Here's a 13% drop. That was 2 of those in 1 year. All right. Here's the following year, 98. Russian default. Oil went to $10 a barrel. This one fell 24% and took off. This is the S&P. All right. So the deal is this is under the bull market. All right. These are things that happen in here. In my eyes, if you catch this with any type of futures or options, and that's where I'm leaning. I'm looking forward a couple of years. Where are we at in all of this? All right, here's West Texas crude, and I just want to kind of point out the circle here with the little blue bars, the circle here with the little blue bars. It then rolled over. Unbalanced volumes up there, blah, 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 yada, yada, yada. This is just from Wednesday, though. Commitment of traders reports, they added, last week it was 35,000 bodies. Now there's an extra 40,000 plus bodies in there. So there's a lot of bodies in oil. Oil cracks, 1 red bar on this weekly. Ugly, ugly, ugly. Boom, there's 45. So stay on your toes. What's that going to do to natty gas? KALU, Kaiser Aluminum. Ugly, ugly, ugly looking weekly bar here. Is this Thursday? Okay. Maybe head and shoulders, right? So this is the whole Trump thing, or the aluminum trucks from Ford, or whatever. I don't care. I don't care. Up, 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 sideways. Head and shoulders. All right, here we go. AZZ here. All right, so We got a high up in here. Oh, this was the apex one, right? Yeah. So this is hitting an apex. Okay. And an apex, usually in these symmetrical triangles, it's a continuation pattern. But the thing is that you have some sort of plan. Everything narrows and narrows and narrows. Here's some options. Yes. What happens if Friday rolls around here $60 and they want to peg it at $60? Okay. You could buy both the calls and the puts. I mean, we've basically gone weekly here. We've gone pretty mellow here on pivot. All right. What if it's false? You know, like I said before, everything's computer related. They're going to have these pivots on here. They're going to have the little cloud. They're going to have the little Fibonacci deal. You know, or either way, the deal is to have some sort of plan. As this thing narrows, these are weekly bars, narrows, the volatility drops. So your option prices drop too. All right. And it's the weekly ones are the easiest one because I don't want you to, you start chucking away $100 a week, it adds up over a year, but you have to have it right. The stuff shows up there. You just, you could go and scan for the lowest IV stuff. And guess what? You may be stuck into something that's just, it's in the process of being bought out and it hasn't moved anywhere for, who's that guy? LinkedIn? Have they gotten rid of that one yet? But the key to all of this is to have some sort of plan. So here is just a symmetrical triangle, and we're reaching some sort of apex on here. So what happens is everything narrows. The computers will kick in either way, and it won't take much. A couple of dimes, couple of quarters, and all of a sudden this thing is going to swing violently because that's how it behaves. Electrical components technology. Technology has been moving. Here's a heavy bar here. So there's a lot of selling that went on here. Look at the angle, and just boom. You got to bounce back on it. The bar again. But it's not having much fun here. It comes out the bottom here. This one looks like 51. What's this one? 38. Natty gas, here's 260. Has to hold the 260, the next area would be 260. Boy, that puckered up some people, didn't it? Overhead is 279 and 290. Like I said, I know you don't want to be that guy, but you have to be smart about this too. And the natty gas, it was a smart move. The deal is it's if it follows through to the downside. Northrop Grumman. What I thought was interesting is that the gun stocks are falling through the floor, and I thought, well, Northrop Grumman is a bigger gun stock, right? And they make stuff, But what happens if Trump's in there? It's the same type deal. Well, we don't buy Smith and Wesson because we had a Republican in there. Well, what about this side here too? Doug T. Okay, see the miners. This is Wednesday. Okay, so this is Wednesday's deal. I'll have to update it, but it just gives you an idea on the bullishness. I wonder if we're back up into this area. I'll have to wait on these charts here. Here's dust on a swing. Okay. Yeah, wait on these until I update the charts. XLK, remember we're trailing it up. When it goes parabolic, there's no stopping. When it goes parabolic, there's no stopping. It's like a rocket. The angle of ascent is increasing sharply too. And I'm looking for some sort of divergence on here. This is the strongest sector. Strongest sector, right? This chips and whatever, right? Strongest sector. Strongest becomes the weakest. What happens with technology? Does it sound like shovel ready? No. Trump shows up and we're playing a different sector now. They're all jumping into mining and stuff. What do? They sell off the winners and they go buy some losers. I mean, it's right. Isn't that how this game's played? Hold on to the losers as long as possible and pitch the winners as soon as you get a profit. That's how it's played. All I have to do is change that thinking. Yeah, that's a hell of an angle. All it has to do is stop. That's all you're looking at. How much are the options? What are the, Can it continue on? Sure, why not? Hey, if everybody, they take their money out of NVIDIA and they end up buying technology. I don't want to go into it, but you know what I'm saying. All right, XLK banging off. What's this? Here's a weekly R1. Remember some of these. Here's pivot, R1, R2. You have some. Remember when we talked about how do you know it won't go from R1 to even pivot or to S1 or to S2? You have to have some sort of plan. Here's where it was oversold, unbalanced volume back in 2011, and now it's up here. So from 20 to, maybe you take this. What about do you hang on for the last 10%, knowing that there's a possibility that you're going to lose, 20%, 40%? Okay, do you want the last 10% or the 40%? It's all math. That was just a Kagi, right? I think it's called a Kagi or something. I wanted to get a longer view here of the technology sector. That's what I sent out to you. How it poked up here, the highest it's been a long time. So they're all pointed bullish, right? Everything's this isn't quote unquote cheap, but everything is in a movement. FAW, what day is this? Wednesday. Okay, so here's R2. This is a world index, FTSE World Index. R2 on a weekly. If we fall, do we just fall here? Well, yeah, and that's, what is this, daily? Okay, so, it stalls here. Here's a spot to stop, spot to stop, spot to stop, spot to stop. I know, how does that work? This is a world one. Draw a trend line under this way. What's that? At best for the bulls, they get two of them. They get either it continues higher or it goes sideways. EDX is moving. Okay, so there's no stopping in this stuff. If it stops and this turns down, you're going to get at least sideways for the bulls. Here's the Qs. We're gapping up. Look at what happened here. Here, gapped up. Okay, so you have a gap up, and it came back through and tested it. So we have a gap up. 129, 127. Remember, I think I started this game at 126 or something. Where are we here? Something about as far out as possible on these options, like $1,300 or something. But you're getting a, 2019 at the money put, and that for me was just to splash on something. Because if volatility picks up, right? Volatility picks up, the option prices are going to pick up. I mean, like I said, the Qs could come down to 127, then go up to 135. The volatility will pick up, similar to kind of like this, and all of a sudden there's no volatility. It's all one directional, and the angle of it's just who's in trouble. Is it the shorts that are in trouble having to buy this up, and the 40% of the people that love the Trumpster? That's fine. We'll just say that's 60%. The rest of the people are just going to work and putting their money in the market because the market's only been going up since they were born. They'll eat a 40% loss. And they'll, because I can buy more. Compounding interest with the dividends. Things are different these days because corporations don't last as long. That's why everybody indexes over time. This was in Shopify, Toronto shop. Just this fat bar right at R2. That was what just caught my attention. Here's 2015, 2016, fat bar. So what do we know? The bodies are in there. Where's the most pain? Down. Front line, I think I sent this out, the inverted head or inverted pyramid. I believe the Baltic Dry Index went up. I'll have to look at those for you here too. But shipping, either way, the shippers are gonna, one of the few that you want to get into on any weakness. RUJ Russell 2000 value. I think I was just looking at this, kind of on the frothy side here. Maybe some RSI divergence. It's a different layout, the value. It's just, I'm just looking. looking to see where everything is in relative. You know, here was the move before. Well, did we get any RSI divergence? Well, I see a little bit going on here. Okay, and then what happened? Well, the market basically went sideways. Traded 10 or 15% lower. Okay, well, then 10 or 15% lower puts us where? Okay, down to here. We'll say, all right, blah, 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 blah. Like I said before, is if anything cracks, if it's this year or next year or the following year, look for these S2s down here. On a weekly, yeah. We hit, where are we at? R pivot, R1. Here's an S2, S2, S2. We haven't hit it yet. Here's one S2. Banged off at S2 down here. Yeah, that's going to be painful, but that's what my eyeballs say. Swing up to here and then crater. I don't know. But that's the first gut reaction. You know, it's that this is the risk that you're looking at. Do you want to be one-sided? Well, you're looking for opportunities. If this only takes 1 year, and I'm buying, say, at the money puts here for the next 2 or 3 years out, you know, I'm good to go. You know, if this happens, and this will be crazy fat numbers. You know, is it going to happen? I don't know. But the whole deal is to have some sort of plan. This is 1 year up. You get up to a year, and now I buy something that's 3 years out. Think about this. How many puts down here, even the pivot? They're going to be cheap. You know? What's this one? Okay, this is a Canadian financial. I set this up just because I banged off of here, but it said financial monthly income. I thought maybe if the commodity cycle was over, I think I wrote about that, the bounce here last week or the week prior. That Canada may feel a little bit of it. Their financials, things that this is just a dividend, you know, it's 6% or something. It's been going up because of commodities kind of deal. But they're susceptible to huge drops too. So it's one of those, do you mind, you know, yeah, I can make you 6%, but can you handle a, you know, 20, 30, 40%, 50, 60% drop? Big fat candles. So quickly it can turn. Take out the Trumpster stuff. Where are we here? November. Take out the Trumpster stuff in 2 days. American outside brands. Yeah, this is your Smith & Wesson now. Actually peaked in July. Now, ANZ. What do we got here? Okay, so this is long debt, short tech. Tuesday, though. All right. Oh, look at this one. This is that QLD I sent you. I mean, this is insane. You know, this is the whole, you know, 2011 low, you know, 30 degrees, 45 degrees, a little bit of a shake up here. Then, you know, it's 70, 90 degrees. I mean, this is, you know, what's this R2? 112, we're at 1. Another 10% move higher in the market. I mean, you know what I'm saying? And this, yeah, this can go on forever. That's fine. That's fine. But what do we know that's going to happen? We know that when the music stops, it's not going to be pretty because as many people as you could pump into it are in there. I guess it could be 1, 2, 3, 4, 5 wave too. You know, I mean, the whole long part was back in here at 11, right? That was my call. We were at 1066 on the S&P in October 6th, I believe, October 8th. Of 11, and we were at 1066, and I think at 1068 I said this thing's going to go to 1294 by Halloween. In 4 weeks we're going to add 300 points onto the S&P, 200 and I guess 230, and it happened. You know, so here was 16 to 22. You know, that was that. Then when we got into here in May, I said the stock market's going to go to, we were at 1,600, and I said it's going to go to 22. You know, that's 50%. And here I said it's going to go to 2,400 by the end of the year. And now we're just, this last, like I said, the last 10%, this is a geared one though. Last time, you guys are on your own, man. This shit scares the hell out of me. I'm not that, you know. Yeah, I get a boner. when oh look, it's like the natural gas. That was me. That's classic Kevin right there. Natural gas. It's classic Kevin. All right, take a quick break here, or pause. All right. Here's gas. This goes back to Tuesday though. So this is gas on the way up. Is this inverted? This is actually inverted gas. Okay, so as this goes higher, price drop 40, 30, 20. This is, I should go check my email. God, about 16,000 of them. I wrote the company to see if they withdraw the gas, just like the UTI and all that fun stuff, UWTI and that. They redeem the shares and then sell the brand name off for the strategy and then sell the product. But this was, some people play the upper swing better than the downswing. Crude oil, lots of longs in here, managed money longs. This one was just volume bars, One, this is moving average here, something. All these are just the swings. Here's 2016. I mean, I'm sure there were some splits or something, and that's why. But it's just a whole, you see a bazillion charts a day, and some of these just kind of, you're like, okay. Natty gas. The amount of longs in here, the money longs. Managed money. Natty gas. Deferred contracts. I'll have to update these when I renew my charts. Boil. You guys heavily oversold here. Is this Friday, the previous week? You gas again. We do have some sort of divergence going on here, but this is before the washout. Looking for some sort of divergence here. Long bonds, short ratio here. So if the bond stuff is already moved, that's the stock side that we're waiting for. I'll have to look at commercials and stuff here and debt. Stuff's moved pretty good. We'll go over that tonight. Russia seemed to have been breaking down here as of recent. RUSL and RSX, RXJ here. Real estate. This goes along with the lower interest rates, right? That was our plan for the first quarter or two of this year. Bonds go higher, bonds go higher, rates come down. Bodies are getting in it though, right? Raise interest rates in March, what'll happen? Will they go scrambling? More rates are coming. You better get it now. We're going to do 3 rates this year. Quickly, better go get a home. Amazing buyouts, huh? Oh, it worked once. Let's try it again on them. The Unilever. Oh, I remember these. Okay, ANET. Technology equipment. Bodies are in there on a weekly. ANET. That one. Whoops, that's fine. No, it's this one. FEMS. Emerging small cap. R2 on a daily. FEMS, options, volatility. Okay, when I talk about the volatility picking up, here's the kind of chart I'm telling you about. We poke in a new high, we take out the low, and we swing higher. So I'm angling for some sort of this type of deal this week for right now. Friday's action is kind of interesting. You know, open lower and go screaming higher, and you basically covered the whole day was short covering. You know, flurry of activity at the end of the day. The Dow got green, holy buckets. Those are some records. Those are beginning to be some pretty long. To have something go up 9 days in a row is 3,600 to 1 on the indexes. To go from 8 days to 9 days, it goes from like 1,100 to 3,600 to 1. The Dow has 11 days. Big time picture, 1983 in the Dow or in the S&P. Up. What is this? Weekly Renko breakout. Now we're getting a hook thing here. This is where I kind of have to ignore the oscillator type deal. I mean, I'll go along with it like with here. I mean, these are pretty clean cut, but you know, it swings again. What I'm disavowing or whatever, disregarding is because of where we're at on this swing. Oh, I'd expect this thing to stall out here at a new high and then roll over. Big time divergence. Just a big picture where we're at. So I'd break this one down to like a daily, and then go deeper in here, because all you're trying to do is look, you know, you're looking for the cracks in it and have something smaller turn into something bigger. You know, here's the S&P. It's a daily, so that moved. So what do we have here then, right? So we have a breakout. It moves higher, right? Boom, boom, boom. Bodies are in here. You know, you're looking for RSI divergence. You know, how far does it? 2,400, 2,500, 2,600? I have it going to 4,750. But that's in another 7 years. All right. You know, like we saw before, what happens if it drops 7% or 10% or 24% or what? It was still in a bull market. That gets us back to that one chart here. You know, here's 2095. Perfect. That'd be perfect. Comes back down to here. It's still trending higher. You know, I mean, it could be a whole 2-day, you know, boom, you drop 1,000 points again like that. Here's a SPY, so we have a double top. This is a, what do we have here? All right, bullish price 242. Oh, that's right, from that last a couple weeks back. Okay, so this is a double top here, 235. We had a date on this, the 17th. Okay, so here, because of its percentage, it's way far off the trend line. So there's a lot of downside on here. Okay. 30, 40 points, whatever on the S&P. But that's, I just want to make you aware how far off the trend line they are. This is our March again, where I circled the Marches. All right, cool. Go to the other one. All right, share this one. Bammo. Okay. All right. I'm going to do it this way. Stop share. All right, end meeting.